Hey guys, it's M's Capitals here, and in today's video, I'm going to be going through a full, new and improved 2023 Smart Money Concepts trading plan. Now, when it comes to smart money concepts, a lot of people overcomplicate it and they add useless things in which you do not need now. This is detrimental to your psychological aspect of your trading as you're getting confused. You do not know what is right, what is needed, what actually works on the real market. So, in today's video, you're going to find out the proper way to trade SMC in 2023 or 2024, depending on when you see this video, how to stop getting stopped out. Now, I know a lot of you have a problem with getting stopped out on your order blocks, or you're just picking the wrong order block. Some of you just simply suck at identifying liquidity. So this video is going to cover all of that, along with you getting a full 2023 SMC strategy step-by-step breakdown. I'm going to go through some examples on TradingView where you can implement this strategy to help you catch real trades on the real market. So let's get into the video. Now, a question among the SMC community is what happened to SMC? Now, if you've been trading smart money concepts like me for a while, I've been trading it for about 4 years now, you'd know order blocks used to be insane. They would tap, they would reject beautifully, and you'd catch insane moves upwards of 1 to 10, 1 to 20, 1 to 30 risk to reward. Now, market is different today. You have to change and adapt to the current market. Order blocks are not being respected as they used to. Now, order blocks certainly do work. However, it's way less. It is not the same as before. Before, you'd enter off a break of structure, increase in volume, and no mitigation back into your order block. That's the only confluences you really needed before you could enter. Now, smart money is becoming way too saturated. With the rise of YouTube and smart money concepts and ICT, many people are finding about this strategy and a lot of people are trading it now. Now, this does not go to say that smart money doesn't work. I'll show you in this video. It still does work to this day and it still works amazingly. It's just a bit harder as markets are becoming harder to read. Now, if you do manage to watch this video to the end and grasp fully what I'm trying to tell you, you'll become a master at smart money concepts at trading order blocks. So, what is the solution for this? Starting off, we can add additional confluences. Now, in the rest of this video, I will go through all the additional confluences, so make sure you guys watch that to the end. Now, before, where we would only use a couple of confluences, we need quite a few more. We need to look for a few more stuff, which leads to us only we're cherry picking our order blocks for the finest and most perfect order blocks. Now, another tip, guys, trade pro trend, trade continuations rather than trying to catch reversals, especially if you're a new trader. Even if you are an experienced trader and you know how to catch those reversals, I still do recommend you stay with continuations and stay trading pro trend. This greatly decreases your risk in trading. It is a lot easier if we're on the daily time frame and we are bearish to trade bearish than try to trade bullish. So if that makes sense to you guys. Now guys, I can't emphasize this enough. You do not have to trade every single day. You do not have to trade every single hour. Guys, taking only the highest probability setups will greatly benefit you guys. The best traders are not trading every single day. They're trading every couple of days and they're looking out in the markets. They're looking to cherry pick their trades for the best possible outcomes. So this is the entry model I will be showing you guys. So it consists of a higher time frame order block, along with liquidity being engineered into the market, where smart money will end up taking out this liquidity. As you can see, we have some trend line liquidity right here, where market then takes it out to the upside. We tap back into a higher time frame order block, where we do get some sort of confirmation like a market structure shift or something. We do get left behind a fair value gap, or order block, or some sort of other confluence that lets us enter into the market. Now, I will be going through this later, so this is just a brief overview of the entry model, so take a look at it, guys. This is basically what it is. So how do you identify what a valid order block is? So starting off with number one, make sure your order block takes liquidity beforehand. If you have sitting liquidity before your order block, this is not good. Market is inclined to take out this liquidity, not tapping into your order block, not respecting it. Say if we did not get this liquidity sweep right here and market just continued to move up and we still had our order block, market is inclined to push down, liquidate these lows before continuing in its desired direction, guys. So make sure your order block takes out any liquidity against it. So moving on, we need our engulfing candle. Now, the engulfing candle signifies a lot of volume in this trade. As you see, the close of this candle closes above the open of this candle. I hope that's not too confusing for you guys. So we get engulfing candle as another confluence. Thirdly, we get no mitigation back into our zone whatsoever. Now, this is our order block zone. I want you guys to mark it out from the body to the body. It should be from the body to the body. However, I mark it down to the wick, as that's where I like to place my stop loss. So no mitigation back into our zone. And fourth, we need a break of structure. So our order block is a bullish order block. Sorry about that. So it is a bullish order block. So no mitigation, and we want a break of structure to the upside. Now we do get that break of structure to the upside, which makes this order block fully valid. Now I'm going to give you guys a step-by-step plan. Now you guys know what a valid order block is. You know the entry model. You are ready for the step-by-step plan, so you guys can learn this strategy for yourselves. So here's a quick overview. Step 1, identify market bias. Step 2, mark out your higher time frame order block. Step 3, your lower time frame confirmations. Step 4, entry. Step 5, targets. Now guys, this summary is not enough. Make sure you watch each step to learn what it means, and be careful you guys do not get it wrong. So okay, starting off with step 1, which is our trend. Now this step is quite simple. You just want to identify the trend of the market. Now a lot of you guys always ask me in the comments, what time frame do I use, what time for this, what time frame to look for lower confirmations. Now guys, IST does say time is fractal, meaning whatever patterns or strategies you can see on the 1 minute chart would also work on the monthly chart. So guys, time frame does not really matter. However, I do trade on lower time frames such as the 15-minute or 30-minute, as I like to be in the market and out as soon as possible rather than holding for weeks or months. So I would look for whatever time frame you are on. Say if you are looking for order blocks on the 30-minute, look for your trend on the 1 hour or the 2 hour. Now you want to see the order flow of the market. Is market respecting bearish or bullish order blocks and fair value gaps? Now, this we are respecting bearish order flow. As you can see, we are bearish on the market. So this brings us on to our step 2. Now, with higher time frame order blocks, I listed a couple time frames. You could look for them on 15-minute, 30-minute, 45-minute, 1 hour, 2 hour. This example is on the 2 hour. Now, as you can see, I've outlined my order block from the body. It should be from body to body of the candle. However, I like to do it from body to the candles. So we want to identify a valid higher time frame order block. And guys, your order block must take liquidity beforehand. If you have liquidity against your order block, market will not respect your order block. It will simply go to liquidate those equal highs, equal lows, whatever you have. Market will take out the liquidity and not respect your order block. So guys, make sure if there is liquidity sitting behind your order block, it must be taken out. So this brings us on to step 3, which is our lower time frame confirmations. Now with lower time frame confirmations, there are 2 types of entry models you could have. So I'm going to show you the first one, which is basically a lower time frame order block entry. So to start off, you want market to tap into your higher time frame order block. As you can see right here, this is our higher time frame order block, and market is tapped into it. Now we let market play out, play out, play out. You want to wait for a market structure shift with displacement. Now we do get that right here. As you can see, market does change in momentum. As you can see, we are bearish, 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 and we do get a change in momentum right here. Market starts to become bullish. So that is our market structure shift, or some people might call it change of characters. So thirdly, we do look for our lower time frame order block. We do look for that engulfing candle, which we do get, and market does respect all signs of our order block, such as breaking structure, no mitigation back into our zone, and we do get nice levels of imbalance left for market presumably to come back and fill these imbalances. So we can presume market will come back, fill these imbalances, tap into our order block before continuing in its desired direction. So on to our second lower time frame confirmation entry model. As you can see, we do tap into our higher time frame order block right here. However, we do get a market structure shift as well. As you can see, this is displacement right here. This is a lot of volume right here. We do get a huge candle, and we are left with a huge fair value gap. Now guys, for your fair value gaps, I really recommend you do add another confluence with fair value gaps, as fair value gaps are not the strongest entry model. I do not always recommend entering off fair value gaps unless it's on the lower time frame. So you want to pair it over a balanced price range, which is essentially a double fair value gap. If you are unfamiliar with balanced price range, make sure you watch my last video on the ICT silver bullet, where I do go on depth on the balanced price range and how to use it towards confluence towards your trade. So secondly, breaker blocks. This trade does have a breaker block. This is what I learned off personally. I will explain breaker blocks in another video. Just let me know in the comments. Secondly, premium discount areas, PD arrays, and more. So You would want to get your fib chart, enter off a premium or discounted area of the fair value gap. So in this example, we did tap into a bearish order block. So we do want to look for market to tap into the premium area of our fair value gap before we start to place our trades and sell. So this brings us on to step 4. Now I'm going to show how you enter on each example. So for the order block one, it's simple. Enter aggressive off your lower time frame order block. Simply enter off the top of the body of the candle. That's how you outline your order block. That's where you enter. Place your stop loss below the swing low. I will go over this later. So as for the second model, you simply want to enter off your fair value gap with your added confluence. Now I have listed it again for you guys. So in my case, I found a breaker block in confluence with my fair value gap. As you can see, I did enter aggressive off my breaker block. Now, as you can see, market does respect it quite nicely and we do get a nice rejection candle. So step 5, targets. Guys, stop loss at your swing low or high. Now, in this example, as you can see, we entered aggressive off our order block and we do place our stop loss below the swing low, right below the wick of this candle right here, which is the swing low. So guys, do not make your stop loss too tight. Be realistic. You don't want to get stopped out and the market ends up continuing in your desired direction and then you're like, oh no. So and you want to place your take profits at opposing liquidity, guys. Equal lows, equal highs, any opposing liquidity, you want to take partials. Say this wick right here, if there's equal lows right here, as you can see, there's quite a nice level of support right here. You want to place a take profit right here. You'd want to place another one at this significant low and your third one right down here. That is just an example for you guys. So with all that said, I'm going to be going into a real market example and showing you guys how to get this strategy and put into place in real market examples in real live trades. So let's get into it. Guys, I won't even take a minute of your time. However, if you are still not a funded trader and you want to get funded, I have an amazing opportunity for you guys. I will pass your funded challenge 100% guaranteed or all your money back. Now, you do not pay a single penny until I get you funded. So it's absolutely zero risk for you. And if we do somehow fail your challenge, which we have never ever failed a challenge before, we will refund every single penny you paid us, plus every single penny you paid for the prop firm. So make sure you guys join the link. It will be join the group. It will be the first link in the description. I have so much proof of me passing people's accounts. How many more people do you want to see get funded every single day? People are changing their lives. People are making thousands of dollars in payouts. So what are you waiting for? All right, guys, I'm on GBP USD and I'm going to be showing you one example on this trade right here, which ran for a nice 1 to 7, as you guys can see, and it ran for 66 pips. Now, it's an amazing trade. If you risked 1% on this trade, you would have made 7% on your account. So 2 of these trades would definitely pass your prop from challenge. Now, guys, all this happened in the span of from 7:30 to about 10, 2.5 hours, guys. In 2.5 hours, if you can make 7%, that's pretty amazing to me. Or if you were to be a little less risky and risk 0.5, you still would have made 3.5%, which is amazing. So I'm going to break down this trade for you guys firstly. Oh, and just to add, if you guys did hold, you would have made 150 pips at like 1 to 16, which is insane. However, I did not hold. I closed at this swing low right here. So now to remove all drawings from my chart and replay the market so I can show you guys my thought process. So firstly, when looking at a chart, I do look at bias of the market. Now, as you guys can clearly see, if I do go onto the 2 hour, you guys can very clearly see market is bearish. Now, if I go to the 4 hour, my bad, 4 hour, market is still bearish. 1 hour, market is still bearish. Even if we go to the 30-minute, market is still bearish. So now, as I flick through my lower time frames, not my lower time frames, through my 1 hour, 2 hour, 30-minute, 15-minute, 45-minute, I do look for order blocks. However, this order block I did catch on the 30-minute. Now, it's such a clear order block. It's so beautiful, as you can see, a lovely engulfing candle right here. And I'm going to explain to you guys why this order block is valid. So firstly, we do get a break of structure to the downside, which validifies market wanting to move in this desired direction. If we do not get a break of structure, we do not know which direction market wants to move in. As we did get a break of structure, we know market wants to move bearish, market wants to continue moving bearish. So secondly, we do have no resting liquidity above our order blocks. So this makes it valid for us to take. We don't want to take order blocks with liquidity against them, as I told you guys earlier, as market will most likely liquidate these equal highs, this liquidity above. before continuing in its desired direction, which would look something like this. Market would come, market would take out these equal highs or whatever type of liquidity say before continuing in its desired direction. So now we have our order block, which is valid break of structure, no mitigation, back into our zone, engulfing candle. I hope there's nothing I'm missing, guys. Okay, so now let's hop onto the 5 minute and we're gonna play market and wait for it to hit our zone. Now if market does not hit your zone, it is no worry, just don't take the trade. Now we do wait. Now, market has tapped into a higher time frame order block. So from here, I'd be hoping to see some sort of reversal pattern to signify market does want to change in momentum, change in direction. We do want to see market start to go bearish rather than continue going bullish. So I'm going to wait for a reversal pattern such as the market structure shift. And the low I do want to be broken is this swing low right here. This swing low right here, actually. Okay, so this is the swing low I want to be broken. So if I play market, lo and behold, we do very clearly get that market structure shift. I'm going to label that for you guys. Okay, now we've gotten our market structure shift. Where is our fair value gap? Now we do get a fair value gap right here. And we also do get a fair value gap right here. Now, which fair value gap would you guys take? I'm going to leave it to you guys in the comments. I'm going to give you 3 seconds to answer. So, okay, guys, I hope you had enough time. So the correct answer would be this fair value gap. And I explain to you guys right now why. We do have another added confluence right here. We do have a balanced price range right here. As you guys can see, it's an added confluence towards our fair value gap right here. This fair value gap is still valid, however, there's no added confluence. As I said, you guys do want to look for fair value gaps with added confluence, such as breaker blocks, such as balanced price range or PD arrays. So now, from here, we are going to place our entry. Now, we're going to place our sell order, stop loss above our swing high at around 10 pips. So now we are going to wait for market to hit or trigger us into this trade. So let's play out market. And lo and behold, we do get triggered into the trade. Now I'm going to hop into the 1 hour and look for take profit. So first take profit is right at this low right here. It'd be clearer if I showed on the 30 minute actually. First take profit, second take profit, and we only took 2 take profits for this trade. However, if you are feeling adventurous, you could go for the full of 140 pips. However, that is unrealistic and I don't really recommend you guys to do it. However, it is attainable. However, in today's market, I do recommend you guys do stick to getting in and out of the market as quick as possible. So now if we do open to the 15 minute and let the trade play out, you guys can see how amazing this trade really was. In about 2 hours, we do hit our final take profit. So just a quick recap for you guys. Higher time frame order block, we identified it on the 30 minutes. So the reason why we chose this bearish order block is as trend was bearish, so we chose a bearish order block. This order block was valid. We had a break of structure, no mitigation, no resting liquidity above our order block. So it's now as we got into our lower time frame confirmations, we did get tap into the order block, from which we then found a fair value gap in confluence of a balanced price range. Before that, we did get a market structure shift, signifying market does want to reverse, which led us to taking this trade. So on to the next example. All right, guys, on to example 2. Now, this trade was absolutely insane, guys. 1 to 6, basically, nearly, and we hit about 80 pips. Now, this trade was absolutely insane in the span of from 1 to about 7. In 6 hours, we managed to catch a 1 to nearly 6. So guys, if you did risk 1% on your account, you would have made 5.5%. So I'm going to explain to you guys how I caught this trade. So a quick breakdown before, just a quick overview, as you guys already have the gist of the strategy. So we did get a nice order block right here, as you can see, our engulfing candle right here. And our order block did leave a lovely fair value gap behind, a lovely imbalance, which market would want to return to. That is an added confluence for us, guys. So I did mark it out. we did break structure to the downside, as you guys can see, and trend, you can see we are in fact bearish on trend. So now I am going to remove drawings, and I'm going to show you guys by replaying the market. Now once I saw the market, straight away on the 2 hour, I did identify this beautiful level of demand. Now I did see we had some nice trend line liquidity right here. Ooh. As you guys can see, this is a very clear area of liquidity. Now retail traders do trade trend lines. Whenever market hits to the trend line, they'll be looking to sell. So after about 3 touches, that is what retail traders would consider a strong trend line. After that, we can expect market to come and take out the trend line, use it as liquidity before dropping off. So that is our second confluence. From here, we did let market play out until it hit our zone. Now I'm going to replay this for you guys, and I'm going to drop down to the 15 minutes. So let's reset the chart now. Ooh. Okay, now let's let market hit our zone, and from here we're going to start looking for lower time frame confirmations. Alright, now I'm going to let market play out as I start to look for my lower time frame confirmations. Now, ooh, we did get a huge drop. Now I'm going to drop onto the 30 minute where I can identify. Hold on, let me drop onto the 5 minute actually. It's a lot clearer, as you guys can see right here. On the 5 minute is where I caught this trade. And firstly, let me replay the market a bit for you guys. I did spot a lovely fair value gap, as you guys can see. Before this, we did get a market structure shift right here. Now guys, this market structure shift is valid as this candle, the body of this candle did close below the low of this candle. Now guys, I always do say with market structure shifts, you do want displacement, which we clearly do get here. And if you do not know what displacement is, it's just market moving with a lot of volume like this right here. Market moves with insane volume. As you can see, in one candle we moved about, let me measure that for you guys. One candle moved about 40 pips, wow, in 5 minutes. So you can clearly see the volume in this candle. Now, we did get our fair value gap, however, it is really big. If I do measure it again, you guys can see about a 25 pip fair value gap. Now, market structure shift shows that market does want to reverse. So from here, we would be looking for our trades on the lower time frame. So I did find this trade on the 5 minute. And what confluences can I see? I can see a breaker block right here. Now, we do have a breaker block in line with our fair value gap. So from here, I would simply set my limits. Wait for market to turn, obviously stop loss above the swing high right here. Ooh. As you guys can see, stop loss above the swing high. As for targets, we're going to hop onto the 2 hour again. As for targets, we are going to, ooh, I can't even see it now. Let me go back onto the 45 minute. Okay, as for targets, we are going to be targeting opposing liquidity, or opposing fair value gaps, or opposing order blocks. Now, here is my target right here. So from here, you simply want to, let me just go on 5 minutes so you guys can see the lower time frame entry. And now if I do play out market, boom, you can see how precise our entry really was to the pip and how much drawdown we really were in, guys. If you do add multiple confluences to your trade, you'll barely get any drawdown. As you can see, 4 pips drawdown at most, which is absolutely insane for a 1 to 6 risk to reward trade. So I'm going to hop back onto the 2 hour and show you guys how this, not the 2 hour, let me hop into the 1 hour so I can show you guys how this trade played out now. As you guys do know, in a couple of hours, we did hit our final take profit, and I did partial on this trade like I do with all my trades. So I hope you guys do understand this strategy now. If you do have any questions, just let me know down in the comments. Thank you guys so much for watching, and I'll see you guys next time.